Welcome to the Payment Strategy Show. I'm Becky Kopplin, VP of Payments at Rainforest. We help software platforms embed payment processing into their core product to grow revenue and improve customer retention. And I am incredibly excited to be here today with Bob. Bob and I go way back, but Bob is, and probably most of you already know, just an industry veteran and now serves as a board member, advisor, investor, and really just kind of an expert on all things payments and vertical SaaS. So thank you, Bob, so much for joining me today.
Hey, thank you, Becky. It's so good to be with you here today. And actually, we've worked together for over a number of years. You're one of my favorite people in the space. So it's really fantastic to be here. Thank you.
Awesome. Well, I'm always interested in people's payments origin stories. So I want to start with yours. Tell us a little bit about your background and how you got into payments.
Well, it's so funny you say that. Like, I've been neck deep in payments and fintech for nearly 3 decades. So think treasury and transaction services at PNC. I was deep in payment startups in the dot-com days. I had some executive leadership positions at WorldPay, and then I went to Merchant eSolutions and took them through a little period of high growth. But most recently, I led Payrix from a founder-fueled startup into a relatively large acquisition, strategic exit to FIS and WorldPay. Oh, and honestly, that wasn't a theory, that was actual execution. At Payrix, what was interesting is we didn't just build a team, we built a little operating machine. Recruited some top tier talent across engineering, product, sales, risk, marketing, and we took a headcount from like 30 to 110 in under 2 years. We built out a really good go-to-market strategy. We negotiated a couple M&A kind of transactions. And I feel proud because we steered the company into an embedded payment spotlight. And we had a little bit of a differentiated product and focus, especially compared to some of the competitors at the time. Throughout my career, I've operated in both venture and PE-backed environments, partnering directly with boards, investors, bankers, always to drive enterprise value and readiness for strategic transactions. Now I'm sort of bringing that muscle to companies I advise and invest in. And, the name of the game, monetize financial flows, deepen utility, scale into platforms investors can't ignore. And if you're a vertical SaaS and you're not thinking like a fintech, you're probably already behind.
Yeah, completely agree. I mean, every software platform needs to be thinking about the financial flows that they either can optimize, monetize, or bring to their platform customers.
Absolutely.
Totally agree with that. But so obviously, spanned quite a few different roles and companies and a few years. What are kind of the changes you've noticed over the last couple that you think would be interesting to share? What's different? What's trending?
Well, first off, embedded is the new default.
Hmm.
SaaS used to bolt on payments. Now vertical SaaS they're building it with it baked in.
Yep.
So if you don't offer payments, you're not a platform, you're a feature. Infrastructure really got sexy, I think, a few years ago. So Stripe and Adyen, Rainforest, Payrix, and now 20 other players are slinging modular PayFacs like it's a buffet line. There's more options, less friction. And the valuation math has changed. Monetizing the flow of funds is table stakes. So if you're not capturing margin, you're not going to get the multiple. And user experience eats everything, vertical workflows, zero patience for janky experiences. And, M&A is up, but so is innovation, especially when fintech is part of the workflow.
Yeah, love that. And you're talking about enterprise value and obviously experience, kind of embedded flow being king. What other things really drive value? Like the contract terms, margin, like what are some of those three, four things kind of after experience? What's driving enterprise value for software embedded payments?
The way I see it, Becky, is if you're not monetizing payments, you're being left behind. And I think what's also driving valuation is getting deeper into the overall workflow, becoming really the operating system for the small business customer of that particular software company. If you look out over the next several years, I honestly believe that the vertical SaaS that are going to win in this space are going to offer not just payments, but it's going to be an overall operating system with accounting and payroll and insurance and lending and all these other kinds of services sort of all baked in. And those are the ones that are going to ultimately win. if a vertical SaaS isn't thinking about being a fintech, then I think they're going to get left behind.
Then they missed it. Yeah, I totally agree. From your experience, you've seen a lot of software platforms, either from the selling side at Payrix and other places, now advising and investing. Kind of, what do you see are the biggest mistakes that software companies are making when they're thinking about specifically selecting an embedded payments provider?
Yeah, you know what? I think it's a great, actually, a super good question. To me, if there is not a product owner, not an executive owner, you're not going to have any outcome. Payments isn't just an integration, it should be
Yeah.
a P&L, and it needs to be treated like one. I also think partner mismatch is always a challenge. And we've seen this in the space where the provider ghosts you after you sign the contract or doesn't answer your phone call at all. And, the other thing I think is super important is bad reporting equals bad sleep. So you don't want payouts going sideways while your CFO is on Xanax somewhere. Honestly, it is one of the most important things. Bad reporting, bad reconciliation, you're going to have bad sleep. And developer pain is your pain. So weak APIs equals slow time to value. I think it's just that simple.
Yeah, I think that's right. When I got a chance to sit on this side of it, right after all of those years of using, like you said, bad reporting, and we got a chance to develop that ourselves, it was one of the very first things. I mean, we have excellent reporting, right? Because you're right. How do you manage a business if you don't know what your economics are? And it's always surprising to me how many providers out there don't have great kind of merchant level profitability. This is the basic. If I sell a widget, I should know how much I make on that. How do you build a business without that? And so that's one of the things we started with is good tools to be able to run your business.
Yeah. And Becky, I also think that if the provider doesn't have vertical chops, if they don't know the workflow, they're going to cost you more money as a vertical SaaS provider in the long run. And so having that industry level experience is also super important. But reporting and recon, everybody asks me, like, if you were rebuilding everything all over again, which I'm not going to do, but if I were rebuilding it all over again,
Yeah.
it's simplified reporting, simplified reconciliation, and it just sort of comes with.
Yeah, yeah. And I think that makes a ton of sense. I think it's one of the challenges a lot of merchants have. So if you can solve that for the software platform, that removes a lot of friction. I mean, kind of through the selection process, and we're talking to vertical focused SaaS providers who are looking at payments. So let's imagine they find one that checks all
Yep.
these boxes. What do you recommend, like effective tools, tips to navigate negotiation contracting? Kind of like we're gonna move from dating, we're gonna look at getting married. Like, what
Yeah.
does that contracting process look like?
Put it all in writing. SLAs, onboardings, roadmaps, rev share. I would literally tattoo it on the contract. Like, make sure that is handled. And, it's super important process. Like, if especially sitting on the other side, working with clients now, every now and then, like, I always say, like, we needed that in the contract. I know you didn't get it, but we probably should have gotten it. Next thing is flex or fail. And what I mean by that is make sure you can port your merchants, ditch your underperformers, access your data, get your tokens. I mean, things that a lot of times people don't think about, but I think it's always super important. I always like to align incentives. So your growth curve, the SaaS growth curve should match the margin curve. And if you're growing, great. You deserve more. But if you're not, a lot of times people are always looking for the best price on the contract. That's not really what you want. You want a partner that can actually grow with you and say, hey, you're going to get better pricing if you actually come to the table and make all this happen. I also think you need cross functionality from day one. And what I mean by that is product, legal, finance, all at the payments table, not just brought in, when the contract shows up, but literally this is what we're trying to do. This is an initiative and we all need to be there. And then I tell clients, when I was on one side, I didn't like these, but I do like baked in renegotiation triggers. Volume goes up, terms improve. Like, I like that baked in, and then everybody knows that we're working towards a target. and a goal.
I like that a lot. Moving through the journey, you've seen a lot of these. You talked about if you're growing, great, right? There's these incentives. And then if you aren't growing, right, then
You should
those
be
incentives aren't.
de-incentivized. I mean, honestly, and I know it sounds crazy to say it, but the fact is, both the provider, because I've been on both sides, the provider and the vertical SaaS, they have to both have skin in the game, Becky. You know this because of your years of experience. And if you have skin in the game on both sides, you're going to have a better partnership all along.
Yeah, yeah. It's one of the reasons why I've never been a big fan of monthly SaaS fees for payment providers. I want it always to be a little usage based. And not that some things maybe that makes sense, but the bulk of the contract always feels to me like it should be usage based. Like we're providing a great service, you're using it, you're growing, right? We're both growing together. I love that kind of incentives align. And I see a lot of good contracts out there these days that are doing just that, which is great.
Yeah. Yeah, I think so. When you can align those, but you also, if I'm the vertical SaaS and I've not put the A team on the project and it's not growing, like they also shouldn't get benefit to send a small amount of volume at rock bottom pricing. That doesn't make sense either.
When you think about those guys that aren't growing and you compare those to the ones that are hitting it out of the park and really doing this well, so comparing those two groups, like what are the winners doing and what's the recipe for their success stories and kind of contrast that with those that aren't growing?
One of the most important things is having fintech DNA in the C suite at the company. We want the execs at the software company thinking like a financial services provider or an operating system provider, and if they're not, they're probably thinking too small. I also think that the ones that are super successful have a product first culture where payments isn't just revenue, it's user experience, and they take advantage of that and actually exploit that. I think other ideas that I have are, owning the workflow. You want your small business customer to live in that app all day long, and then you can sell them anything. And then I think high volume, high frequency SMBs with a fragmented market, even better. Anytime you can make a small business owner, because I'm a small business owner myself, so it's like I've been on all of these different sides. I just want everything to be easy. So the easier that the software company makes payments along with everything else that they do, and they have that fintech DNA, the more successful this rollout's going to be. And I think you've seen it. I know you've seen it in companies that you worked with on the consulting side years ago. And I'm sure you're seeing it now. When you have this level of buy-in at the top, it's going to be successful and the volume just follows.
Yeah. And you've hit on this a couple different times about how important that team is, right? DNA at the C-suite level, like dedicated project manager, like those kinds of things. So let's imagine kind of software company, like they realize they've missed the boat, right? They're not doing anything with payments. They're going
Yep.
to decide to go this way. Is that what they should start with? Go find somebody great to come in and teach them. How do you get caught up if you've missed the boat on that?
I mean,
People
I
on the
think you need to
team.
put a sniper on payments, a GM, a tiger team, ownership equals outcomes. And by the way, they're not easy to find because, I mean, you and I probably have access to most of the top ones in the space right now. But I think we're going through a process where a lot of people are being developed. And I've seen people that really had no payments background. You and I've worked with a couple of them who built a payments business that any software company, anybody would want to come after. So I think you got to put that sniper out there and make that happen and really just go at it.
Yeah, I'm with you. I totally agree. And I generally recommend that person needs to sit on the executive leadership team. They need to be reporting to CEO. Like it's really difficult 2 or 3 layers down to get much done. Like that feels like that experienced repeat GM head of payments sitting at the table. That's a great starting point.
Absolutely. I'm working with a client now who's got a program that they're just ramping up, and it's in the government utility billing space. The opportunity for them is huge. And I sat down with the CEO. I said, you need top dogs on this one. And sure enough, they've gone out and hired people that actually have deep industry level experience in government, in utility, but also in payments. And again, if you got the right owner on that, that equals great outcome.
Yeah, yeah, totally agree. When you're thinking about the go-to-market motion, so let's imagine we've got the right people on the team, right? We've built out a great kind of embedded product. What does great go-to-market now look like for embedded payments?
I think it needs to be built into, again, back into the DNA of the company. But I also think software companies need to price to win, not to gouge. Margins matters, but adoption matters more. Getting the customers working on that. Clearly, you got to have the frictionless onboarding. If activation sucks, churn wins. Always be iterating. Payments shouldn't be a set it and forget it. It's all about optimizing scale and constantly teaching the customer. So that means, again, you have your team, you have your payments team, but also educating the sales team and the marketing teams of these companies to actually go out and talk about all of this. If you want to ultimately be the operating system for your small business clientele, think gym, think hair salon, think restaurant, like you want to be that operating system, the customer facing team needs to constantly be talking about not just payments, but anything that's going to make it a better operating system.
Yeah, I agree. I've chatted with a few folks in consulting specifically where they kind of want to segment their payments team. Like we've got our payment support team and our payment sales team, and you've talked a lot about DNA, and I think that I agree with you. Like that needs to exist core because what customers, buyers need to feel is payments is just a natural and normal and necessary part of this end-to-end business management software. And it's not like I got all this other stuff for you and it's all great, but if you want to talk payments, let me transfer you over to this guy over here. I
It's
feel like that breaks that experience.
it does. And again, I think that the software company has to ask itself, who do they really want to be? I mean, if you're a software that's supporting the pest control space, if all you're doing is sending routes, you know, that becomes something that's easy to consolidate with another one or pick off by a competitor. And I think getting deeper into the customer operating system, and I keep going back to that, it's customer OS, like that is so important with everything else that's going on in the future. There's so much to be thinking about. So everybody's got to be a little bit of I wouldn't call them an expert in payments, but they got to know why payments is important. And
Yeah.
that's across the company.
Yeah. I always feel like a great test of that working really well throughout the organization is if you were to sit anybody down and go, hey, as a customer, I don't want to use your embedded payments. I want to go use, XYZ, like my brother-in-law, he sells me cost from an ISO, right? So somebody's brother-in-law. And it kind of want all of the people to be able to go, it just doesn't really work that way. You can't break it apart, right? Like I always want that to be, I feel like that's a sign of great success is your front level people go, that it doesn't work.
Well, it's so funny because the genesis of Payrix was originally a few guys in Brooklyn. They had a little ISO and they started losing business to a very well-known restaurant software company. And they said, oh, okay, guy. And they were giving the payments away to their cousin who had a restaurant. And they said, oh, yeah, you'll be back. And then they realized they're not coming back. Like they were that embedded and that engaged with that software company. So they literally went out and built Payrix because of the fact that they were losing this business to software companies and said, hey, I think if we built something that could actually support the software companies, we'll actually drive volume and revenue here. But that was the whole idea. They literally lost their relatives who said, yeah, we're not coming back. I know we're paying more than you're going to charge me, but we don't care because the value of staying on the software was greater than any savings they would have had on payment.
I love that example. I tell platforms that all of the time. Cost isn't as valuable to your end users as it is to drive value and savings and connectivity. That we've been talking a lot about this end-to-end business. And we always kind of like, well, oh, we're going to drop price and then everyone's going to come running. And you're like, you know what? That's really not oftentimes the most valuable driver for merchants making decisions. Make their lives easier, drive their business growth, let them sleep at night because you give them this great reporting. That's so much more important than pricing.
I couldn't agree with you more. I used to always tell this example, like my sister owns a gym. She spent years in corporate finance, but fitness was her passion. And she told me early on, she said, Bob, if I never have to go to a bank again, I would be grateful. I never want to have to deal with a payments person coming to my door to take my payments. If it's 2.9 and 30, I'm paying it if the rest of the system works perfectly. If I can schedule people for classes and personal training, that's all I want. And for them to be able to pay for it as they go.
I think that's perfect. Switching gears just a little bit, let's look forward. What trends are you noticing and kind of predictions? What do you think the next couple years looks like for payments and embedded fintech?
Yeah. First off, I think AI is going to eat up, risk scoring, onboarding, recon, gone. It's going to be replaced by models smarter than anybody's head of operations. Embedded accounting will also rise to the forefront. It's going to automate ledgers, categorization, real time visibility into financial performance. You're going to have co-pilots, for these small businesses, forecasting, tax prep, collections, serving the back office and watching, ARPU explode. I think lending, insurance, banking, embedded finance isn't coming. It's here. Don't just move money, store it, protect it, lend it. I think you're going to continue to see vertical roll-ups, own the workflow, you own the wallet. I think that cues a private equity bidding war. Regulatory pressure, if that goes nuclear, they're acting like banks. They're going to get treated like banks. But, if I have to really think about like predictions, the best SaaS platforms won't look like SaaS at all. They're going to be, like I've said like 10 times in this discussion, like they're going to be the operating system for small businesses. And it's going to be complete with embedded payments, lending, insurance, accounting, banking, you name it. They're going to have AI co-pilots. I think native wallets and accounts are going to be out there. I think they're going to become the system of record for ops and finance. So for small business ops and small business finance, it's very fragmented today. You might have a software that runs your gym, but you also have QuickBooks, or you also have some other accounting system. And I think all of this is going to come into one. But if you're not becoming the financial and operational brain of your customer, someone else will. So payments is always a great way to dip your toe in the water as it relates to some of these embedded products. But with AI and everything else, it's going to move fast. And I think the vertical SaaS that are thinking about this from that level are going to be the ones that win.
Yeah, start with money in and then follow the rest of it where it goes, right?
100%.
Track it and then where you have embedded payroll, embedded accounts payable, you're kind of follow the
Exactly.
rest of the flows.
Exactly.
Yeah.
And obviously, again, the more hooks the software company has into their customers, the more value they bring. And, there's a high cost to exit, and it makes those relationships strong and sticky.
Yeah, yeah, I love that. If you could give SaaS leaders that are listening to this right now one piece of advice about driving revenue and enterprise value, specifically with embedded payments, like what's that one piece of advice that you'd offer?
Okay. It's not back end plumbing, it's a product. That's how you need to think of payments. And it's not a new revenue line, it's a valuation catalyst. So, valuation of their business. Platforms that are monetized financial flow become system of record, wedge themselves deeper into the customer experience, are going to be the ones that win. Just ask Toast or Shopify or Service Titan. You are now a fintech. Accept it, own it, monetize it. I guess is the one piece of advice that I would give. You're a fintech, accept it, own it, monetize it.
Yeah, yeah, that's it. You're a fintech now. Accept it, own it, monetize it. Like we're doing bumper stickers and t-shirts and all the things. That's
Yeah. I
great.
just think the ones that win are going to be thinking that broadly.
Yeah. Yeah, I love that. Thank you again so much for joining us. I've really just very much enjoyed this conversation. I feel like you and I could talk for a few more hours on this topic, but I'm gonna wrap us up
Absolutely.
here and just say thank you. Thank you for joining me today.
Thank you so much, Becky. I really appreciate the time, and great to see you again.